everybody, Dave Bartosiak with trending stocks at Zacks.com. Now, back in the day when you used to be able to make money trading stocks, one of the hottest stocks out there was Roblox, ticker RBLX. It's an online entertainment platform, is the sort of thing that captures the minds and hearts of kids all over the globe. Now, the growth numbers were eye-popping, the engagement was astronomical, and the stock was going parabolic. All good things come to an end, though. With Roblox, which went from $70 to $140 in 1 month, came crashing back down to earth. A couple of disappointing earnings results saw the stock tumble into the 20s by May of this year. Today, there's a little bit of renewed interest in the online juggernaut after the company reported a jump in daily active users of 23% year over year. Hours engaged were 4 billion, up 16% year over year. Does this new data mean it's time to load the boat on Roblox again? Why don't we take a look at Zacks.com and check out what analysts and the data have to say. So Roblox is a Zacks rank number 2 buy in the gaming industry that ranks in the top 30% of our Zacks industry rank. More on that gaming industry in a bit. But let's take a look at these numbers. So I alluded to a little bit of disappointment in the earnings, and that's what you got. 30% downside earnings surprise. No bueno. But look forward to this quarter. That's what it's all about. There's a positive earnings ESP of 13% right now. That's a very good thing. They're probably going to report about the second week of November, so keep your eyes out for that. And this last year has really been the reason why there's so much frustration. And we're going to go into this a little bit later with the contraction in earnings so far this year. So let's take a look at these detailed estimates, see what I mean. So current year was down 26% over last year. And again, next year, they think that's going to contract. So this is where the bearishness comes. And also, yeah, by the way, they're still losing money. Now, remember, a lot of these digital, online giants do this sort of thing where they're so focused on the revenue, and then they'll deal with the earnings later. Well, the revenue story is a good story. While this year, $2.8 billion, year-over-year growth of just 2.6%. Next year looks better, 15% growth on the sales side, getting that number all the way up to 3.2 billion. So eventually what they'll do is they'll figure out how to turn those billions into some profit. I know thinking of a company right now that's not making any earnings when we see the market doing what it's doing is a little bit discouraging, but that's the whole thing, right? That's why this stock is well off the highs. But look at what's happened recently. Just over the course of the last 30 days, really, you have an analyst coming out and getting a little brave, upping those earnings estimates across the board. That's helping to push these numbers up. So this is a good thing. And like I said about this earnings history, when you get 3 bad numbers in a row, it's not a good thing, okay? And let's take a look at this price consensus and EPS surprise chart on Zacks.com and see what I mean. And here, when the stock went public, had some really high hopes. It was supposed to be making money. And then it just didn't deliver. And now the funny part is estimates had already come way down before that earnings report at the end of last year that helped the stock spike up close to $140. Eventually, that gives way, and earnings really are what drive that growth in the stock price. And what you see here is that these numbers continue to go down. Now, have they bottomed out? The fact that it's a Zacks rank number 2 buy implies that perhaps they have. So as these analysts start to tick up, we only have one that have done it so far. But if that truly marks the trough here, this could be a good buy the dip opportunity here as this stock hopefully ticks up once the earnings follow suit. Now, I wanted to check in on a couple of other stocks within this same industry. So if you just click on that industry, you can get this sort of Zacks industry rank page. You can see a lot of what's been going on. And remember, this is gaming, so this is going to include online gambling companies and the sort. It's not just online educational videos for kids and things to grab their attention. But 43% to the downside, the year-to-date return in the gaming industry. That's no bueno. Look at the last month, almost 13% to the downside there. Not a good thing. And again, going back to the last trailing 12 for the last 1 year, really bad. It's basically been cut in half. Other names in the industry. You have Boyd Gaming, you have Play Studios, Do International or Do International. I don't know. You're gonna have to ask those guys how to pronounce that one. Double Down, L's Game Tech. So I just pulled up one of these, a couple of these. This Play Studios, the Zacks ranked number 1, strong buy. B for value, A for growth, B for momentum. VGA composite score of A. It's trading under $5 though, so we're talking really early here in the game. Maybe something to keep on your radar for the long run, but I like to wait until these companies sort of develop and mature a little bit more until I'm really rolling the dice on them. But looks like this company is going to turn a profit next year. So again, current year is terrible, along with everybody else. It looks like huge earnings contraction. They're going to lose $17 this year, but next year, coming back to profit, going to make 2 cents. It looks like depressed sales numbers this year, but that's going to tick on higher. So there's one to take a look at. And then Double Down Interactive, Zacks ranked number 2 buy. And this is one of those digital social casino games. Okay, so a little bit more on the gambling side of things, not your whole wholesome Roblox, but in the same industry. And another huge EPS disappointment on this one recently. And if you look down at the rest of the growth numbers, similar story where you have contraction this year. Next year is when things are supposed to blow up. You have contraction on the sales side. Don't like seeing that, but then supposed to expand next year. So a little bit of hope there on this stock, trading at 24 times earnings, which you got some huge EPS next year. Overall, though, of the ones that we're looking at here, I still do like Roblox. Plus, you have these numbers that are ticking up to the upside. Who knows? Maybe you can get back in the good graces of the stock market gods and go for a little bit of run over there at Roblox. Every time you share this video, parents get 5 minutes of peace and quiet after getting one of their rugrats to sit down and pay attention to Roblox. Subscribe to the YouTube channel, Twitter at Bartosiastics. Check out Zacks.com/promo for this week's deal on the home study course. For everybody here at Zacks.com, I'm Dave Bartosiak, and I will see you next week.